Today, we saw stocks come crashing lower. However, look at the candle on the S&P. We have a wick, and the question is, who is trapped? Is it the bulls or the bears? Now, we come over and look at the fear and greed index. Right now, we're sitting at 45. Yesterday's close, we're sitting at 44. Then we come over and look at what took place today. The Fed takes a wait-and-see stance in interest rate outlooks. That is exactly what the Fed Watch Tool had been placing in, like we've been talking about. And the Fed Watch Tool has also said the next chance of a rate cut is not going to be until June. And that's exactly what essentially Jay Powell reiterated today. Now, when we talk about what could potentially be catalyst out here for the markets, and this is going to be very important today. Well, we know we had the FOMC, but what about tomorrow? We come over and look at Thursday real quick at the economic calendar. Let's not take our eyes off the ball. The ECB has their monetary policy statement. This is very similar to our FOMC statement. You might say, Mike, we're trading the S&P, that NASDAQ, and all that fun stuff, and you are right. However, the euro is the largest weighting of the dollar index. So if the euro gets moving drastically in one way, that is drastically going to affect the dollar index as well. Then we have advanced GDP numbers coming out. We have the weekly unemployment claims. Then at 10 a.m., we have the pending home sales. However, it's not just that. Starting with today after the bell, we had Tesla, we have Meta, Microsoft, IBM, Lam, just to name a few. And tomorrow before the bell, UPS, MasterCard, Dow, Caterpillar. And then after the bell, we get Apple, Intel, Visa. So we have a lot of catalysts that could really sway the markets one way or the other. And we look at the biggest expected movers out here over the next 2 days. Tesla expected to move plus or minus 10%. Intel expected to move plus or minus 10% on the session. So again, we're going to see, is this going to shake things up here a bit? Now, we come over and look at how the indices fared across the board today. The Dow was down 136 points. The NASDAQ was down 100 points. The S&P 500 down 28 points, with the Russell 2000 being down 0.49. We look at advancing issues versus declining. We had 59% of issues declining on the day. Then when we come over and look at the sectors across the board, the laggards out there was real estate, followed by technology. And again, we've seen this from the beginning this morning. This morning, we can see NVIDIA showing signs of weakness, looking like it was going to gap lower, and that's exactly what we got. And then NVIDIA continued to drift lower. Then this afternoon, we get this nasty red candle right here, and we see the indices at that same period of time have a drastic movement. And we can see right here, essentially, Trump said they need to curb NVIDIA sales to China. And look right here, we can see right here, price chart in the S&P when that announcement took place, took a big dive down. That's the same exact time that we also seen a dive in NVIDIA. Now, as we come over and look at after the bell, we look at Microsoft, knowing they had earnings out today. Yikes, Microsoft down 2.91%. Let's take a look at Tesla. Is Tesla out yet? Tesla right now down 2.8% after hours as well. Then let's take a look at IBM, and then we'll take a look at Meta as well. IBM, a rocket ship on the way up 11% on the session. Then we take a look at Meta. Meta spiking down only to come back up, essentially flat at this point in time. Now, you guys might have missed it last night, but essentially ASML reported earnings around 1 o'clock in the morning. Boom, big gap up. ASML closing out the session today up 29 points. Now, let's jump over and take a look at the dollar index real quick. Dollar index on the daily chart. And again, not a whole lot to see here. We have a little bit of a wick on the top, a little bit of a wick on the bottom, and I would say the wick on the top is larger than the wick on the bottom. We also come over and look at the yields today. Inverted hammer type of candle, more of a doji-ish type of candle with a wick on the top. However, it's in the context of the yields trying to pull back, and we do have an ABC pattern completion on the yields all the way down here at about 4.38. Then we dive over and we take a look at the Dow, still unable to make another new all-time high. Russell 2000 today basically going sideways, candle of indecision, wick on the top, wick on the bottom, and then we jump back over and look at the S&P. Notice S&P had that wick to the downside. However, as we look at the 4-hour chart, the MACD indicator is crossed to the downside, and we have that large gap out here from Monday. So we got to ask ourselves this question. Are the longs that were long up here near all-time highs, are they the ones that are trapped? Or is it the bears that tried to short near the lows today that are actually trapped in this market? Let me know your thoughts in the comment section down below. Now, this morning, you can see we gap lower. S&P unable to fill the lower gap this morning. And as we look at this tomorrow, if we are trading above value or low, then I want to try to look for the market to potentially come all the way up here and fill the gap. Now, if you like a way to support the channel at no additional cost to yourself, Check out the 3 prop firms I trade with: Apex Trader Funding, My Fund and Futures, and Take Profit Trader. Right now, you can get the best deal out there using the promo codes and the links down below. Now, as we come over and look at the futures markets real quick, we start off looking at the S&P. That last 4-hour candle is a candle of indecision, basically a doji looking candle, long wick on the top, long wick on the bottom. And it's not really that surprising that we wicked right up towards this high volume area on the chart. Now, when we dive down and start looking at, let's say, the 30-minute chart real quick, we hit the P point, we almost hit S1 pivot, and I'm still going to classify today as a D as in dog. Now, if we continue to push up, I do like this area of the profile. Basically, this overnight, where the overnight session last night traded, up in that area provides a great target location. It's going to be a minus development area. That one normally will act as a magnet, but the first time we come back into it, a lot of time the market's simply going to either consolidate or we'll start to get a pullback the other way. As we look at value area low, that's going to come in at about 6,062.75. The point of control will be about 6,062.00, with value area high being 6,086.50. Now tonight, if we are trading above value area low, then most certainly I want to look for the point of control to be tested, and then potentially value area high, minus development area, and then a run back towards the highs from today. However, I want to warn you guys about a potential trap, and that is the fact that when we have a D-shaped profile, whichever direction the market first breaks, quite often ends up being nothing more than a trap. So we need to be very vigilant out there tonight and tomorrow to see which way do we break, and does the market continue to try to push in that direction. So tonight, if you're a bull in this market, you'd like to see the market come down, try to challenge the lows from today, and then potentially rip back up. And at that point, you can either be aggressive, try to target value area low, or be more conservative and wait and see, can we push back above value area low before looking for some of those higher price targets. Now, if we do break the low from today, then one of the things that we want to do is, as we look at the 4-hour chart, measure swing low to swing high. That 50% Fibonacci retracement level is a nice juicy target to the downside at about 6,030 and a quarter. We know from past experience, the S&P loves to retrace to the 50% level, and we'll see, do we make it to the 50 or maybe even all the way down to the 61.8? Now, we come on, we start looking at the QQQs real quick. What do we got going on over here? Qs having a hammerish looking candle. We still have that large gaping gap out here left from last Monday. Then on the 4-hour chart, what do we see? Basically run up, consolidation up here. We have wicks on the bottom of this candle, wick on the top, and then on the 30-minute chart, this is where it's going to get interesting. We have a D as in dog shaped profile, and the real question is, are we going to run up and try to fill the gap from Monday, or are we going to come back and try to challenge the lows out here from Monday? And again, right now we're kind of in a wait and see. The longer we consolidate up here, this is nothing more than the market building calls, and we're going to see, is the calls to go higher or lower? Right now, the MACD indicator is basically neutral, dead smack on the zero line. So we don't have a huge advantage in terms of bullish or bearish looking at the MACD indicator off the 30-minute chart. As we dive over and we start looking at the profiles for the NQ futures, notice today we had that push up. The NQ was unable to even make it down to the 38% retracement. Now, 38% retracement would be a minor retracement in what could still be a very bullish move in this market. So let's not be surprised if the NASDAQ continues to drift a little bit lower down towards the 38% retracement or even the 50% level. And that could set up some type of ABC pattern, which could then potentially take us all the way back to fill in the gap from Monday. And let's just role play this out real quick. If I grab my Fibonacci extension tool, measure swing low, right up here to the swing high, I'm just going to pull it down to the 50% level. Notice that would take us above the highs from last week. And if we even dive all the way down to the 61.8, that would still be enough to come back and fill the gap. And if we dive down to the 78.6, that would bring us right up potentially to the gap being filled. And like I said, we have a lot of catalysts out here in the markets. We have economic data, and we also have earnings coming out. As we come over and we start looking at the daily charts real quick, notice we have a minus development area here that we have mapped out today during the live stream. However, we did not make it back to that level just yet. Now, if you want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But essentially that last 30-minute candle, look how long the wick is on that candle. We ran all the way back down to the low, and now we're back up towards the upper portion of this candle. Like we talked about with the S&P, I'm going to classify this as a D as in dog. So we got to be very vigilant on, could there potentially be a trap that is going to be set tomorrow? If we start breaking to the downside first, my first instinct is going to be watch out for the trap, as it's probably going to shoot back up. And if we start breaking to the upside, That could be nothing more than a trap to send it back lower. However, we do have that large gaping gap left behind up here, all the way going back from Monday, and that could potentially come back and get tested. Now, when we look at the volume profile levels real quick, we're going to value area low at about 21,445.75. We're going to have the point of control at 21,513.25, with value area high being up here about 21,564 and a quarter. So notice we are getting very close to value area high. So tonight we start cracking above value area high. I want to turn my attention to that minus development area. Can we make it up there for a potential retest? And then the next thing is, can we push through that zone? If we do, I want to go back and try to retarget the highs from last night. Now, if you're thinking about trading with Take Profit Trader, before you do so, make sure to watch this video right here.